各位觀眾大家好，歡迎收睇呢次嘅周一長談，我係馬思爾。嗱，我諗啦，大家近期成日最多聽到個話題都係講新冠疫情啦。咁我哋今日咧就講下一啲唔同嘅話題。嗱，我哋知道啦，近呢10年嚟咧有一個大家好興聽到一個嘅詞彙嘅，就叫做加密貨幣 cryptocurrency。咁啊，最當中表就係講緊 Bitcoin 啦。咁我哋睇到近期咧 Bitcoin 嘅價值咧就有升到歷史新高添。咁究竟其實 Bitcoin、cryptocurrency 呢啲加密貨幣，以至到佢背後引申嗰種科技叫做 blockchain 係啲咩嚟咧？我哋今日咧就請咗一位咧喺呢方面有研究嘅專家咧，同我哋講下㗎。咁我哋今日嘅專家咧就以視像形式參與呢個討論。咁佢咧就係卑詩大學嘅講師 Dr. Chris Rowell 嘅。Hello Chris，thank you for joining us today.
Thank you for having me, Gavin.
Hi. Hello, Chris. Okay, maybe since when we talk about like cryptocurrency, we always hear two terms, Bitcoin and blockchain. So I guess what we know is about Bitcoin is an application of a blockchain technology. Maybe we first talk about what is a blockchain and what is a Bitcoin and how blockchain is applied in the Bitcoin.
Sounds good. Yeah. So Bitcoin was actually the first application of blockchain. So the motivation there, maybe I can talk about the motivation behind Bitcoin and then why a blockchain is suitable for something like Bitcoin. So around the 2008 financial crisis, Bitcoin, the Bitcoin white paper was released, and Bitcoin went live in 2009. And Bitcoin is really a digital asset that was created. So a digital token that is intended to represent money that we can access and trade and send around on the internet. So it doesn't have a physical form. The reason that this needed a blockchain to be possible is because the motivation is to avoid going through a bank or some kind of other financial institution to access and send and receive value. So what a blockchain is and why it enables this kind of application is blockchain is a distributed digital ledger. So it's a digital ledger in the sense that you could think of it as like a spreadsheet that everybody in a network has access to, but it's not like any spreadsheet. There's rules for how you can update the spreadsheet. So we have some kind of ledger with who holds what value, but only those that actually own the value, so own the Bitcoin themselves, are able to access their account and send that value to someone else. And because this ledger is purely digital, it only exists in the virtual environment, and it's distributed across the network. When, if I want to send you Bitcoin, I would be able to access my account and send you Bitcoin without having to go through a bank or any sort of trusted third party. It would just be, I would enter my account, I would be able to send you Bitcoin, and that transaction would be updated by the distributed network of computers rather than any specific actor in the network. So the unique thing here is, firstly, we can show that we own something without necessarily having to trust another actor. If I want to show that I have money in the bank, I have to trust my bank to make sure that I have that, and represent that accurately. And then I can send that value to someone else without having to rely on my bank and someone else's bank to facilitate that transaction. I just go into my account and I access my account and I send that value to someone else. And if I follow the rules, then the network will update that transaction. So basically the value shifts from my account in the ledger to theirs, and everybody's copy of the ledger will update and recognize that transfer as legitimate and irreversible.
Okay, I see. Because I hear a really special term about the blockchain is the distribution of networks. So whenever there's any transaction, it will update across the whole network. Is that the reason why when there's a data recorded, it's become irreversible? Because once it's recorded, all the data has the record, no one can reverse. Is that correct?
Yeah, there's a couple of reasons. So yeah, and one is the fact that the ledger is distributed, which means that the updates to the ledger, so new transactions, have to be authenticated by a network, and the network has to reach consensus. So you can't just, if one party in the network tries to push through a transaction and the rest of the network won't accept it, then that transaction can't happen, right? So we can only accept legitimate transactions that follow the rules. The other way is actually the data structure of blockchain. So this is a little bit technical, but when updates are made, they get grouped together into a block of data. So, a bunch of transaction gets initiated, they get pulled together and that forms a block. And then blocks get added to the chain sequentially so that they're linked to one another. So over time, I'll put a transaction, it'll get put into a block, and that block will be linked to the next block in a way that if there's a change in the block, it will be identifiable because the link between these blocks in the chain will be broken. It will be obvious that some transaction in this block has been changed because the other blocks are they're referring to each other in the network. So that's obviously how it gets its name. It's a particular way of structuring updates in the ledger so that they can't be tampered with, because if they're tampered with, then we can recognize that immediately and we would return to the original state. So yeah, it's that combination of two things. It's the fact that we have to, it's distributed across the network, so we would have to control more than half the network to convince everyone else of, to get that consensus, to convince them of our version of the truth, which is very difficult to do when it's distributed around the world. And the other thing is that, as blocks are added to the chain, it becomes increasingly difficult over time to change something because it's linked to so many other blocks. You would have to try to change so many different things at once, and it becomes very, very challenging.
Yeah, it's interesting because when I first hear about this technology, one puzzle that I'm always in mind is, okay, so since the one specific feature about blockchain is it's really hard to compromise the data. So whenever there's compromise, it will reject. So does it mean, say, for example, in one particular database it's become compromised, any record, any transaction they initiate is rejected? Does that mean that database will become not reusable, or become like forfeited, or what would that happen?
So again, the network is converging on a single source of truth. So if I tried to change something on my version of the ledger, it won't be accepted by the network unless it's legitimate, unless it follows the rules. So I can change my version all I want, but the rest of the network isn't going to agree with me. It's only when I take over maybe half the computing power in the network that I actually have a chance of convincing them of my version of the truth. So if the blockchain is implemented correctly, then updates that I make will be broadcast to the network, and they'll be picked up and put into a block, and then that gets broadcast to the network again. They reach consensus around this group of transactions is legitimate, and that will get added to the chain. And over time, it's theoretically possible to try to corrupt this process by perhaps controlling more than half of the computing power and changing, try to convince the network of your version of the truth and changing the data in blocks and things like this. But if it's implemented correctly, it gets incredibly difficult to do. So again, it comes back to that distributed nature plus the data structure. If these two things are in place, then it becomes very, very difficult to change things around that you're not supposed to.
I see. Yeah, I think now when we talk about what kind of mechanism to avoid any data being compromised, I think that's a really big topic in the past 20, 30 years when the world getting more computerized. So now the next stage we also will see a lot of analysis saying when we use the blockchain, gradually, this blockchain technology will gradually replace the traditional database because the data in the blockchain is more reliable. It may potentially replace a lot of different professionals too. So can we say, imagine as a company, when they use a blockchain technology or how do they apply the blockchain technology to create a competitive advantage or add the value to the company versus their competitors?
Yeah, it's a good question. So actually, it's an important clarification here that this isn't really essentially a database. I keep using this word ledger. Think about what we're doing here. We have a network of different actors that don't really trust each other fully. So if we trusted everybody in the network, we would get one person to manage a database with all the data there, and then we would be fine. We would just refer to that single database. But because that's cheaper, right? It's cheaper to keep everything in one place. So if we're within a single company, for example, we trust the IT department, we trust the accounting department to keep records for us that are accurate. When we start to work across companies and across individuals, around the world, and some of those may be anonymous or difficult to identify, then we need, these rules in place where we have this shared ledger that we can all kind of update and ensure that the code and the rules of the ledger are very difficult to circumvent. So really, the way that you would implement blockchain technology is in a network where you don't have full trust. So it enhances trust across a network of actors with different motivations and different incentives. But if you have completely aligned incentives, it's much cheaper just to keep one record of something. We're creating data redundancy here. So on that, if we take that point, then we think, okay, if we're replicating data across a lot of different places in the world, we have this redundancy of data. We really only want to put a minimal amount of data on the blockchain ledger because it's very costly. We're taking a data set and we're keeping a lot of different copies of this data set. So we only want to keep minimal information that we can have that trust. And perhaps, it doesn't actually replace traditional databases. It will work with traditional databases. Because maybe you'll have a full data set in a database, and then you'll have like, we call it a hash or some kind of representation, short representation of that database, of that data set, and put that on the blockchain. And you know that if the hash, this identifying code of the data set matches what's on the blockchain, then you know that data hasn't been changed. So there's different ways to do it, but basically you're trying to work with existing systems and existing databases to put minimal information on the blockchain so that you can check, the authenticity and the accuracy of information without necessarily having to put all that information on the blockchain itself, because it becomes extremely costly. So blockchain is, it's very, very good at keeping a shared record that we know is accurate. But it's very bad at computing and it's very bad at storage because of the properties that it has. Because it's slow to get to consensus. It's challenging working with so many different computers around the world. And we don't want all those computers around the world to store, huge amounts of data, because then it becomes even slower. So yeah, so that's the distinction I would make. You're really working with existing systems and then using this as a sort of a trust layer, a trust infrastructure to be sure that the data across these systems is accurate and hasn't been changed.
So
does that make sense?
Yeah, so basically blockchain is more about not the individual database, about the network connecting the whole database. That is the structure we call the blockchain. Is that correct?
Exactly, yeah. And you really only get value out of a blockchain when you have multiple parties in a network. If we implemented a blockchain within a single organization, so we have the IT department running part of it, and then the logistics department running something else, and then manufacturing running something else. It's we don't really these actors can trust each other. We could just keep these records in a single place, and we really don't get the value out of having a blockchain there. It's just cost. So when it becomes valuable, now we can extend beyond the payments use case. So we can do this with payments. We can record an asset that can be used as money. It could be called Bitcoin. It could be Canadian dollars or some other currency. We could represent that as a token on a shared ledger and use this for payments. That's when it becomes really valuable, because now we're working across a network. We want to send and receive value and know that those transactions are kind of authentic, legitimate. We can also represent other things. So instead of money, instead of a digital asset like Bitcoin, blockchain's been used in supply chains, for example. So if I'm if I produce lettuce and we know, or green vegetables or something like that, and I want to track that through the supply chain to know that once it gets to the store, if there's a contamination, then I want to be sure that, this is exactly which vegetables or, which produce is affected. So I can have a lot greater accuracy if everyone in the supply chain is contributing to this single source of truth about how the product goes through. So there's, I'm using the lettuce example. It's actually been done by Walmart in North America. They're tracking their lettuce, their leafy green vegetables through the supply chain because it gives them a much more accurate picture rather than trusting all their individual suppliers to keep records for them about where this lettuce has been. They now have a single source of truth, this blockchain record that everyone's contributing to. So you can have this single line of sight. You can check almost immediately where a product comes from. And that's very accurate. The data hasn't been changed. So that's another way in which it's been applied. And other examples in supply chain are things like diamonds, different types of products that are very valuable, but there's a high cost of being wrong. So you can have all your network contributing to this single source of truth now. And in this messy supply chain where previously everyone collected their own data and kept their own records and shared their records with each other, now we can contribute to this single source of truth, and everybody can see this information, know that information is accurate.
Okay, so now we talk about quite a bit the application. We know about the blockchain and the application of the blockchain. So now we try to connect the blockchain to Bitcoins. Because what we know is Bitcoin basically is a computerized formula. People have to mine the formula in order to get the Bitcoins. How is that work, and how does that relate to the blockchain to make sure, because Bitcoin technically is untouchable, intangible currency. How does that work? How do they mine the Bitcoin out?
Yeah, it's a great question, and it's kind of a deep question because there's Bitcoin is such a novel thing, right? It's such a novel system, so it has a lot of new parts, and it's really interesting. So the way that Bitcoin works, so Bitcoin is it's a digital currency. You know, we know that we can use it as money, we can send it around. But like I said before, you know, when I send Bitcoin to you, for example, that transaction has to be picked up by someone and processed. So picked up by, you know, an actor in the network and put into a block. And so a block is formed and that block is added to the chain, and the network agrees that that block is legitimate, so the transaction will go through. Now, mining and you know, transaction validation is, you know, part of this system, because someone has to have an incentive to, you know, to devote their computing power to picking up my transaction and putting it into a block, right? There's, you know, I'm not going to do that for free. I'm running like a server that I want, you know, I'm grouping together transactions, I'm adding to blocks, and I'm putting those, you know, telling the network, hey, look at this block. This is, you know, we can add this to the chain. There has to be some kind of incentive. And so what happens is those miners, so we call them miners or transaction validators, the people creating those blocks, they get rewarded in Bitcoin. So it's kind of a self-sustaining system. You actually have this, you know, unit of value that's used as a currency, but also sustains the system itself, because these miners, when they're successful in creating a block and adding that block to the chain, they get rewarded in Bitcoin itself. So new Bitcoin get issued over time as a reward to the miners for performing that work. So the way that this actually happens, you know, what you end up happening is a competition between miners. They're actually competing to get this reward because Bitcoin became really valuable, right? So it's, you know, wouldn't it be great if it's a business for me now? So I can create, you know, I can group together some servers and I can try to be the one that wins this competition, creates those blocks, and then gets the block reward. So I get, you know, paid for this. And what we've seen over time is that this competition is intensified, and now we have, you know, large companies and, you know, factories of servers trying to be the ones to create those blocks because the rewards are so big now. So, and you may have heard, Gavin, that, you know, this actually in aggregate, it consumes a lot of energy. So, you know, we have this kind of challenge at the moment that with all these computers around the world competing to create new blocks for the Bitcoin blockchain, in aggregate, you know, that it uses a huge amount of energy because you're trying to devote computing power to something. There's one winner, but there might be thousands of competitors at the same time. So again, there's a lot of computing redundancy and a lot of energy expended in this. And the way that the other reason for this huge increase in energy consumption is because the competition, as it intensifies, the way that we create those blocks, the difficulty, you know, you're basically solving a mathematical puzzle to be the one that groups transactions together. You devote computing power to that, you solve this kind of puzzle, and then you're the one, if you're the first one to solve it within a time period, you're the one that wins, and you create the block and you get the reward. But over time, as the competition intensifies, the puzzle gets harder to solve. So we have this, you know, gradual increase in more computing power, and then a harder puzzle, then more computing power, harder puzzle. And over time, you can see that the mining difficulty just keeps increasing. And then the energy consumption with that keeps increasing over time. And now we have, I think the Bitcoin blockchain uses as much energy in aggregate as a small country. So it's, you know, that's a problem that needs to be solved, right?
Yeah, I agree. I do imagine, we do hear that like it takes a lot of energy to resolve a puzzle to get a new Bitcoin. But when we talk about the new Bitcoin, I have two kind of economic related questions. First of all, particularly Bitcoin, it gets more popular and more attention since about 10 years ago after the last financial crisis in 2008. Why this is not a government like issue currency? It's kind of intangible, coming from a so-called a mine. Why people will really trust this as a currency? This is the first question. And my second question is like, since this intangible currency, it must be created by someone, and then the other party going to mine this currency out. That means those creators, they have the possibility or potential to manipulate the supply of this cryptocurrency. Is that correct? So that means it's a really like a risky game, like non-government regulated games. Is that correct?
So these are great questions. Actually, these are kind of related questions. So because we don't know who created Bitcoin. It's created by an anonymous person or maybe a group of people called Satoshi Nakamoto. And Satoshi, you know, there's been theories about who Satoshi Nakamoto is, but we've never found out. So it's never been confirmed who this person or group of people actually is. And I think that's kind of clever because what they wanted to do was to create a network rather than, they wanted to create a network that didn't have a leader. And so there's no one in the Bitcoin network that can actually, on their own, manipulate what happens, change the money supply or change the rules of the network. I mentioned before, you need to get to consensus on updates that are made to the blockchain. If you wanted to change the rules around how that consensus was reached, if you wanted to change this, the way that we mine, for example, you change the way that you compete from guessing a computing algorithm or solving a computing algorithm to something else, you would have to convince more than half of the network to then go with you and make that change. So once it's established, once these rules in a very distributed network are established, it's not like one person can change them. They need to convince a lot of other people to change them too. So that's kind of the beauty of these types of networks. You need, it works across the, there's no single actor that's more powerful than others necessarily. You need consensus. It's also a challenge. If you want to change something, it takes a long time, right? You need to convince a lot of people. So in terms of the money supply, so that comes back to, the rules are coded into the network from the start. And all the Bitcoin that will ever be created is coded into those rules. So this is open source code. You can view the code. You can view the full transaction history of the ledger. It's because it's meant to be public, permissionless, so anyone can join. Public, which means anyone can view it. So anyone can actually look at the code. It's just very, very difficult to change the rules, change the code itself, because again, you need to convince a lot of people to do that, to move with your version of the network rather than the original network. So to address your question, there's no way for even the founders to actually manipulate that code anymore. It doesn't matter that they're the founders. They're kind of on the same level as anyone else. And the monetary policy is that a certain number of Bitcoin will be issued. So a finite number of Bitcoin will be issued over time. And unless we change the rules, that will be the Bitcoin all the Bitcoin in existence will come out. I'm not sure when, a couple of decades from now, but over time, the way that new Bitcoin are issued is pre-programmed. So it's we know what's going to happen. We know those rules won't change unless the whole network moves that way. So really what we've seen is, instead of changing rules in the Bitcoin blockchain itself, what people tend to do is make a copy of the Bitcoin blockchain and then call it something else and then start their own brand new network. Or they just start their own blockchain with their own digital asset, and they have more, different types of rules that would be more specific to the applications they're trying to build. So I guess that's the end game. So again, you have no single actor can control the money supply. It's pre-coded. The rules are kind of open source, publicly visible, and we have a finite amount of Bitcoin that will ever be created. So it's the way that people would trust this now. I think it's kind of interesting because you have that certainty. It's not like there is a government that might be incentivized to increase the money supply in response to something, or they can mess around with the money supply for whatever reason. There's no one that can do that. So now this is actually more trustworthy than a lot of fiat currencies, a lot of national government currencies that we see around the world, because we have that certainty. So you saw this year the price of Bitcoin last year, the price of Bitcoin increased significantly. And I think a large part of that was, due to the uncertainty around COVID. We really didn't know how economies and governments were going to respond and how they were going to, deal with this. So people started moving their money from traditional, assets and traditional currencies into something like Bitcoin, which is actually in some ways more stable and more predictable.
I think it's really interesting. Before we trust the government, that's why we trust the legal tender, the currency we are using nowadays. And this cryptocurrency is more like there's no single entities being trusted on. It's trust based on the whole network. And we trust the code creator at the beginning. And once the code has been implemented, the creator cannot even change the code itself. Otherwise, the whole chain will be, the whole system will be collapsed. I think that's a really interesting idea to know. And I think when we talk about the transaction, one feature we know about Bitcoin is the owner and the transaction, when they happen, it can be shown anonymous. So would that become a possibility of some privacy or illegal transaction issue? Because government right now, we don't know how government can regulate this type of currency. So would that be what do you think how government can tackle these kind of things?
Yeah, it's a good question. So when you create a Bitcoin account, you would create a digital wallet. It's called a digital wallet, and basically that has a a public key, which is like the address of your wallet. That's what you kind of give to other people so that it's a string of code that helps other people find your wallet and put value in. You have a private key as well. So that is what helps you kind of get into your wallet and take value out, send it to someone else. And so, when this public key is really what, and your public address essentially is what identifies your wallet to the world. So the anonymity comes from how well is your public address, what people can see, linked to your real world identity. Sometimes you'll have to set up a wallet using an email address. Sometimes you'll have to go through more rigorous know your customer or anti-money laundering processes, depending on who you set up that wallet with, because there's multiple providers. But yeah, definitely at the start, this was seen as a way to detach your real world identity from your wallet address. And that's why we saw in the early days of Bitcoin, this became really popular on the dark web, because even if it's sort of pseudo-anonymous, right? It's not perfectly anonymous because maybe there's an email or something that links me in some way to my wallet address that everyone can see. But that's much more difficult than me using a credit card to buy drugs or guns or something online. I'm no longer going through a bank that knows a lot about me. I have much more kind of confidentiality and privacy, and anonymity to an extent. So there's ways. There's actually other protocols that have come out since Bitcoin that have tried to be even more anonymous, and they're really trying to get that, to push the anonymity sort of value. But yeah, I would say that Bitcoin is not ultimately anonymous. There's always something, there's typically something that can be used to trace people's wallets back to their individual identity, to their real world identity. And there are services, they work for governments, they work for law enforcement that do blockchain forensics. And they're the ones that are trying to figure out, who are these people that are moving lots of money around the world? Because again, you want to regulate that as a country, as a jurisdiction. You want to figure out where money is going. So it's creating significant challenges for governments. They are dealing with this. They are working with blockchain forensics organizations to try to figure this out. And you can, ultimately you might need to pull the money out, right? So if you need to sell your Bitcoin to someone else or turn it into cash somehow, turn it into fiat currency, then you can tax at that point as well. So there's ways in which it's different points of the system you can tax, but it's much more difficult than traditional types of assets.
I'm quite sure this may be potential PhD topic for a lot of forensic on this blockchain forensic transaction matters. But anyhow, okay. Then my last question is right now. So now, for example, Bitcoin, those cryptocurrency, it become as a popular investment, like to general public, compared to the traditional investment securities like shares, bonds, like money tender, like foreign currency. Is Bitcoin a reliable investment securities, or maybe it's not a general public thing? General is too risky that general public should not touch about it until it become really more mature.
Yeah, it's a great question. I would say that, I'm making a disclaimer here, I'm not advising anyone to buy or do anything with Bitcoin. It's, it's up to you. But I would say as part of a broader portfolio, why not? It's, I wouldn't go all in but it's part of a broader portfolio. I think it kind of makes sense. I think you can see over the last several years, we've seen institutional investors move towards Bitcoin, and that's kind of driven the price up as well. So it's becoming increasingly legitimate as sort of part of your portfolio. And so time will tell, time will tell, because ultimately we see Bitcoin as an investment, but really its original purpose was to be a unit of value, a currency. So, its utility as a currency is, some people might use it as a currency. It's not really used for that. It's more just something that you buy and perhaps buy other currencies with, or use, or just sit there and speculate with it, or sit on it for a long time. Time will tell whether it will keep increasing, based on its value as a currency, what its original purpose was, or will it be like some kind of digital gold, which is how it's been treated at the moment? And so will that continue? I think one really interesting thing is, we've talked about blockchains as distributed systems. However, it doesn't necessarily mean that you can't have an actor, that controls, that creates a digital asset and controls the supply of that asset in a blockchain system. Bitcoin is one that was intended to be distributed and have no leader, and not be able to be changed by any particular actor. But central banks around the world are looking at, can we use blockchain technology to have a distributed ledger where we issue our own digital currency? So say we issue Canadian dollars on something like a blockchain ledger. It might be a different data structure. It might be, a distributed digital ledger, whether it's blockchain or something else. And then we can have, individuals can have their accounts and they can send and receive value with very, very low transaction fees, because now you're doing it on the same spreadsheet effectively rather than going between different banks. So I think what's cool is, if we have these digital fiat currencies, we could bank with our central bank. That would be my main bank account. And then I might use commercial banks to give me loans or credit cards or some other kinds of services, but it changes the ecosystem in that way. So I wonder, over time, we talked about how difficult it is for governments to regulate and control this technology. I think what they're trying to do now is maybe offer their own alternatives, trusted alternatives that utilize the technology, and people will really be willing to use, digital Canadian dollars, US dollars, whatever, because, they trust their governments. And I think that's a really interesting application of technology as well. So over time, will we just move to going back to governments to trust us for these kinds of things and get the same benefits without necessarily the risks? Or will Bitcoin remain as this kind of digital gold type thing and its own asset class? And that's maybe my feeling that will continue. But yeah, I don't know. I'm really hesitant to give people financial advice. That's not something I do. I just love the way these kinds of things work and thinking about that.
But for sure, there will be a lot of evolution on this type of technology, and we will see what will happen in the next 10 years or so. So thank you very much, Chris, to join us today. 各位觀眾，咁今日咧，我哋講到呢個加密貨幣咧，就記得大家如果真係咧想研究嘅時候咧，記得真係做足功課咧，先做任何決定，因為咧呢個科技始終都係好新嘅，未來都仲有好多變數㗎。咁我哋咧今日時間嚟到呢度，下個禮拜再講下其他話題。